Most people analyze the bank stocks in a wrong way. Either they go straight to the ratios or go to the price without even understanding how bank operates. And that small mistake shows up later when things goes wrong. In today's video, I will be showing you a complete breakdown for small finance bank in India, which basically will be a complete wrap up of it, and it will be helpful for those who are investing in any bank anywhere in the world, but primarily focus on small finance bank. And what we'll cover in this short video is what is small finance bank, what is a Camel's framework. If you have not heard about it, I'll give you a complete breakdown, and we'll use how you can use AI in this analysis to do the Camel framework, and I'll give you a bonus powerful prompt which you can use straight away and start implementing it. And what is a bank recovery and failure, key analysis factors we should be considering for any bank, and we'll do a chart analysis because we believe in chart, that's a reality. And we'll do a chart analysis for all the small finance bank, and at the end I will do a Ujjivan small finance bank SWOT analysis. And there's no recommendation of buy and sell. Please make sure that you understand that for education purposes, but stay till the end because the bonus of how you can download that prompt is at the end. And if you don't have time now, you can come back to this video later, but make sure you give yourself 15-20 minutes to analyze this and join me in this journey because this will be super powerful, give you a complete framework. How do you analyze small finance bank in India or anywhere in any market? The prompt is very generic. Okay, so let's get started. So first thing first, let's start with what is small finance bank. Let me do that quickly. So before we go into what is small finance bank, let's do a anatomy of banking recovery because this is important and there's a lot of tailwind which is going on in India. And this particular chart, which is amazing visual, which is shared by a Twitter handle Munaf Full, which is a credit to him. So let's get started with this. So first of all, what is important here is to understand the anatomy, why some of the sector is in tailwind, right? Which is important for us to understand. So phases of that banking, there's an early recovery of the bank which happens, and then it transitions to phase two, and then there's sustainability. And this is where currently where we are in early stages of recovery of economic growth, because as you know, when when the country economy is going through, banks are the ones who benefit the most. And you need to understand that because of the high interest rate regime, things, the banks were undergoing through stress. Now there's a recovery, credit growth is happening, which is their main bread and butter of giving loans and earning interest from that. And the interest rate has been recently been reduced in India. So you can see there's a credit growth which is happening because of the business activities and others. So lower loan growth resumes, and that is what actually gives kind of leg up, because once there's a business activity, the loan growth is happening. And then and you need to have understanding of whether they are able to have collect the, because giving loan is easy, collecting that is most important parameter for any bank, and that decides the risk parameter for. And initially at the early stages there'll be a lot of fragility in this. This is what is depicted in this diagram. Then eventually in the phase two, we transition in with strategic shift. Now it moves to secure lending, where you take a collateral loan portfolios is mix, pivots to more towards based, because you are creating asset, and then you have some asset backed loans, vehicles, business finance, gold, and the risk is mitigated for that, but margin compresses because now people are giving assets, so obviously the net interest margin will reduce a bit for that particular bank, so they probably move to the safer mix of their loans, which is secured loans versus unsecured loans, which are basically not backed by anything. And third is the sustainability of phase three, which is funding discipline paramount, because you need to now at this point focus on pure growth, building stable, low cost deposit franchise for long term, right? That is where the banks move towards, and then sustainable margin determines success. So, as you can see, what does it mean? There are a lot of jargons, but it's important for you to understand that when there is a credit growth, you have to have a maintain the discipline, and you have to have a proper risk mitigation things where you can collect your loans by providing that high quality loans, not giving loans to everybody. When there's a credit growth is diminishing, banks want to show profitability, they want to share on the returns, and they tend to start taking higher risk assets on their books. The bank's assets are their loans, right, and their liabilities are deposit. So make sure that you understand that, right? So by this you understood the anatomy of banking recovery, which is happening right now. In my view, we are in early stages of a recovery because we're seeing the sign of credit growth, so there's a long runway ahead for us. So moving on to this, what is small finance bank, right? First of all, people say small finance bank. What does it mean, small finance bank? And that is important for you to understand. Small finance bank focuses on providing lending to underserved, or probably those people who are like a micro enterprise, small businesses, and that is the small finance bank. And you can see here, which is clearly articulated, is instead of giving to large finance operations, they tend to give to the small business owners, SMEs, and they're kind of backbone for any growth because they are trying to provide lending to those who are underserved or may not be in the coverage of the large banks and corporation. So their target audiences are small scale borrowers, depositors who traditionally banks often overlook, and fulfill the specific small needs like a Manappuram gold loan, providing specific gold loans, small ticket size, financial inclusion. So they're part of the financial inclusion, and they're doing basic banking service. So that is the definition of a small finance bank. With that out of the way, so let's start with understanding of our next point is why small finance bank is important. And this is critical because that would decide what is, and we'll come back to Camel's framework in a minute, but before that we need to understand the key differentiator factor of small finance bank, and that would determine whether you're going to be investing on that or not, what transition on. So I'm trying to share my conviction which I'm building on this particular sector, why I'm doing it, and what's going on, what is the underlying current on it, and what, and if you understand that value migration, then probably that will give you a better understanding of holding that particular stock. Not that I'm recommending any buy and sell, but to give that view. So let's start with what is going on, what the sector provides us, right? And there are a number of stocks which are going. We'll go through that. So first thing first, let's go through this. So most of the small finance banks, there are a number of them which are listed, are aggressively moving away from legacy microfinance concentration. What is microfinance? They're giving like those to a very small ticket size which are unsecured, and they basically do a daily collection, and they're diversifying a secure asset like affordable housing, MSME, gold, vehicle loan, because when interest rate goes down, there's a lot of economic activity happening. So they're pivoting to the better mix, which I told you. Now, why this matters? Because this reduces their volatility associated with unsecured lending, and they move from um, the microfinance exposure, they can move to structurally de-risking their books, which means they get more valuations and earnings. And one of the key things we're probably missing is universal banking arbitrage. So RBI, Reserve Bank of India, is trying to give universal banking licenses to this small finance bank because they're becoming critical part of the economy. And as you can, there are number of them listed. Like there's one AU Finance. It's already been given in principle approval, and Ujjivan Finance, small finance bank, will talk more detail. Is going to get soon, and basically they have applied for it. We don't know whether they're going to get or not. So what is the benefit for getting universal banking license? That's major enabler for them. Why? Because it reduces the cost of fund. What does it mean? When it reduces the cost of fund, it, and you have a better brand visibility, you can serve more people. You basically, you don't have to focus on lower priority sector lending, because bank enforces, the RBI enforces, if you're a small finance bank and not a universal bank, you need to focus on certain set of individuals which probably can be um, they might be vulnerable for collections, and so that's why they can target from 75 to 40% in lower priorities, so that way they can get a better mix, and removes the ticket size restriction law. This is a big thing. The ticket size is what decides, right? Because if you're giving a big chunk of loan, if you have a good credit risk underwriting, you can give a big loan versus you could get small ticket size loans. So you have to have a collection risk there. And so, yeah, so that is one of them, and that could add some basis on their profitable margin. And that is where they become a mature player over a period of time. And that is what is arbitrage, which is being played out at the moment. And I will cover that. And operating lever giving, because now operating leverage, what is that? Because you already created big network, you got branches all over, and suddenly you got this license. Now operating lever is like you have already a fixed cost. Now incremental cost is all coming going down to the earnings, so your ratios of earning ratios towards a fixed asset goes up. And with the same set of branches and same set of number of employees, you are able to give more loans, get more deposit, and basically your flywheel effect comes to place. So that's kind of a thesis which is playing out, right? So now that, with that, let me take you through what is Camel's framework. Now, Camel's framework is is a simple framework to analyze any banks. All right. What does it say? C stands for capital adequacy, right? So how much a bank has capital in case the depositors comes and withdraws, what is their capital adequacy ratio? What is the A stands for asset quality? What is the asset quality? What is their mix, whether they're secured, unsecured? And M stands for management quality. E stands for earnings. So obviously the management quality, how the management is able to, leverage it. You've seen examples of Yes Bank and others. So it's very, very important that you understand that. Earning quality, you need to understand the earning qualities. Liquidity, what is their liquidity levels in case they have loans, lending, what is the levels of deposits versus lending? Are they enough sufficiently backed? So just in case there's number of withdrawals goes up, right? So you understand that. And then sensitivity of the overall mix, which we'll look at it from Basel framework. So I'll give you a prompt at the end, which will give you the complete analysis. I know it's too heavy, but it'll be very simple at the end. I'll make sure that you will be able to analyze it in a very simple way. This magic prompt can do this all the work, and we want to make use of AI in this basis, right? So first thing first, let's go to which are the different small finance banks we have. So I'll take you to the chart, and this is our glide indicator. So I made this list of all the small finance bank. So there are three, four, five banks which are small finance banks, and there could be more, but I'm just tracking these ones. So AU Bank, Ujjivin Finance, Equitas, Capital SFB, and JSB Jana Small Finance Bank. And now let's go quickly all of them analysis. Now, as mentioned, AU Bank, look at this chart. This is a glide indicator. If I just simply use the simple moving average one to make your things, look at that. Last week, the stock has given with volume 5% up, and it is moving, trending very high after moving. So let's take a weekly one. Look at this. The stock is moved up, interesting enough, from this breakout has already gone up 21%, and it is a leader in the pack at the moment, right? So from non-trending, it has become trending, and last week was strong week for the this bank. So I would keep it positive. Obviously, it has already run up, so probably not a great time. With Ujjivan Finance Bank, I've been acclimating that. I'll clear disclaimer for you, no buy and sell recommendation. And because, as you can know, and if I look at it, my glide indicator, which told this indicator very beautifully, is this. And if you would have known by now, this blue rhombus told me there's some action happening, so you are early in the game, and you start acclimating it at that point and then wait for breakout. And you see, last time when it happened, um, you can see here, what did you get? You get almost 183% returns, and before it corrected, now you're getting a gain. So if I go back to my simple moving averages, now you can see here, in weekly chart, there was a bit of a gap up. Now the stock is coming to clear a resistance zone three times, and we have to see whether what happens. So obviously, this is a crucial. This is at 2020, so it's going to be a multi-year breakout if it does that, and we'll see how it goes. So, but overall, Stock is forming a nice base, which is looking like setting up nicely, but time will tell. We don't enter, we don't tend to predict stocks. We anticipate and take positions. That is important, right? Anticipation makes you money, not prediction. So don't get involved in that game. Focus on things. But at the end of the day, I probably I took small tranche on Friday, but that was based on my risk thing. So please don't take that as a basis, because it's my duty to inform you what I'm doing. Is also I'm putting my money on the line as well. But it has, as you can see, there's a nice volumes which are happening, which is great. This breakout, and it give you a bit of shakeout and then moving up, and now see whether it will surpass that or not. Time will tell, right? So the let's move to Equitas. Now Equitas, you can see it's setting up nicely. So I think it's going into stage two analysis, which will be the case. So I'll put in a watch list for myself, which is nice. And we'll do the camel analysis for this particular stock as well. Moving on to Capital SFB, you can see with all going around, this stock is completely dead. So I completely ignored that because I don't think so. They're the leaders. And same goes with Jana Small Finance. Look at this. By looking at this, you can tell you don't have to waste time for at all. And if you go back to the glide indicator, right? You can It'll tell you clearly that it's sell, right? Uh, you can see it's red, and if I because this doesn't have, and you see here, so if I go to my daily chart, yes, it has given this indicator. Doesn't mean that every time you buy, because you have to look at other parameters as well. It gives you that, but after that, it had a false um, breakout, and then it given a hit. So you have to look at holistically. So I hope you got the view here, what's going on, and I'm super excited about what's going to happen with, obviously, AU Bank is a leader in the pack. Ujjivan Finance is following it, and also it has its own set of challenges, which we'll see in the Camel framework, and also they are also expecting a bank, a universal banking license approval, which could be a game changer for them because of the lower credit risk. And then Equitas Bank, which is setting up nicely, but it has a lot of headwind at the moment. So let's see how it pans out over a couple of weeks, because we are peaceful weekend investors. So far, if you're enjoying it, give a thumbs up, put in comment box what did you learn so far. I'm looking forward for your comments, read them personally and try to respond that. And if you want to share with your friends and family who can benefit, I've most welcome, and I think that will also help YouTube algorithm to find more peaceful weekend investors. So let's further ado, let's go into some more detail of the most powerful part of this particular video, how to do Camel framework. So let me show you a very interesting and powerful way of doing that. So let me bring my chat GPT. Okay. So I'll show you. And this particular prompt is a big prompt. Okay, it does all the camel analysis. So I'm telling do the camel analysis. So let me send it. So what it'll do is it'll going to ask you, and this instructions which I've given gives you this. Now tell me which bank, which country it's important, and I will provide you complete framework of step by step on this. Okay, because it takes a bit of time. Okay, so let's do this. While it is doing it, I'll do Equitas small India and it's listed. I'll just do that. Okay, while it is doing that, I've, interest of time, I've, I, I've done the analysis for one of other banks with it given the same for each given small finance banks, and this is how it looks like. While that's doing in the background, that's the power of AI, right? We can now do all of that fun in a very simple way. Now look at this. Below is a camel snapshot for Ujjivan Small Finance Bank, and in the using the latest disclosed quarter, so it's using the 30th September. I can even ask them to use the latest one, but this is 30th September. So camel stands for capital adequacy. What does it mean? I'll go through quickly. Money buffer: how much extra cushion the bank has to absorb losses and still keep running. So capital adequacy ratio is 21%, and tier 1 has 19.9, good, and large cushion. And so industry average is 18 to 24, so it's within a good range. Tick. Now, going to asset quality, loan health. How many borrowers are not paying back on time? Lower is safer. Gross bad loans, GNPA, that's the most important. What's their gross net loans? At 2.45% of people are not giving back. Net bank is net bad loans are 0.67 and provisions are 70,000. So good to average provisions have been done, expecting that this money will not come back. So the asset quality is 3.6 cited in RBI trend. So I think that is something we have to look at it because they had um, specific challenges on microfinance where they're coming out of this headwind on that. Management capability. Now, how well is it run? Growth, discipline, cost control, keeping collections. So collection is strong, 99.5%, which is great. Good management usually is do that. So I'll not go line by line. I'll give the whole prompt to you. Then earning quality, ability to make money consistently without taking risk. So their ROA, return on asset, ROE, what is their PAT, average. So it's coming as average, and that's why I explained to you. If you remember, it's coming out of the woods, so it's a long runway. If credit growth has to come in, these kind of banks will benefit from that, and that's why I'm making this early video for you guys to understand that, right? Liquidity, cash comfort, can it meet withdrawals and short-term bills without panic borrowing, which is important because they don't have to borrow at a high interest rate. So they have deposit base of 39 and 211 crores, and CASA is around 27.5. So credit to deposit is 88.2. So that means that they have a good cushion going on, so which is good, right? And average is around 20 to 35%. And sensitivity to market risk, how fragile it is if the rates moves on the or the economy slow down, funding cost jumps, borrowers struggle. So that's kind of fragility check you're doing. It needs attention because I told you about it. This particular bank is still coming out of boots from the microfinance lending, so they're doing the mix change. Read their commentary, understand that. Now that you understand this piece, overall verdict is stable, right? So two things that will kill bank: first, capital buffering strong, and bad loans. Sorry, and so it is kind of in a stable thing. Let's go back to what happened to Equitas. I'll not go line by line, but I'd like to see what happened to that. Did it come up? No, it's still doing it. So any which ways, let's see if it had. It's still doing. Okay, no problem. Okay, there is. Anyway, looks like it's taking some bit of time, but anyway, I've covered everything. Luckily, I had the whole analysis done, anticipating that. But it takes up time because it goes through and does all the research for you, which is quite a hard work you're giving and saves you a lot of time. Trust me. So if you want this prompt below, just type prompt. I will send you the link to download this prompt. All right. And so far, if you have enjoyed this video, give a thumbs up, subscribe to my channel, hit the notification bell because that's where you're going to get the notification because it takes a lot of effort to put this together. So, till next video, stay safe, peaceful weekend investing. Bye bye.